The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil Chapman here, sitting in for Tommy O'Brien on this Monday, the 30th of December, just about to wrap up the year. Wow, Dow's down 416. The Dow futures at 42,931. The E-mini futures are down 70 points at 59.57. The NQ down 290 at 21,407. The RTY, that's the Russell 2000, just about on the 200-period moving average, down 20 at 22.43. And we're looking at BTC, Bitcoin. Bitcoin is down 2,100 at 93,210. We discussed this last week. I said there's actually a week and a half ago, I said there's a real good chance that the Bitcoin, both the futures and the GBTC, which is the Bitcoin, GBTC is the Bitcoin Investment Trust, and that goes with the position that we have, the IBT, or that's the Bitcoin iShares, all had made the peak, possibly PGs, right on the 17th or so of December. And now you've got this pattern that I call the dreaded H. Let's just see if the Bitcoin is doing that. Yes, that's exactly what we were looking at. Didn't draw it in, but I discussed it last week, and I said there's a chance that the Bitcoin is going to make a dreaded H pattern. I'm putting this together with the Tesla, which we almost went short today, and then I decided, I discussed this for about a week and a half. I just didn't need it because I see 400 as a pretty good support level. It's already down to 421, made a high of 488.54, but it's got this dreaded H pattern. What is the dreaded H pattern? The Chapman wave methodology. It is this pattern right here. It's where the price comes down, usually at a recovery high or high. And then I'm hearing the bell, so let me just see if I'm doing something wrong here. Chat. Oh, you need a chart. Oh, my goodness. It's been quite a long weekend. Let me just get you that right now. Ping, ping, ping. Sorry about that. Let me do this. Okay, I need to go to TV there. Need to go to share screen. Click screens. Click that. Click go to live. And there you can see it. Oh, why did I miss that? Can't believe it. All right, so let me do this again. This is a pattern that I call the dreaded H, and it's red because it fails at a peak A or a B after a most recent high, comes straight down, arches over, and then takes out that left side low. And in this particular case, it'll be the low of in the 419s. And here we are at 421 right now. This is Tesla. So I see this coming down, and there are a number of reasons why I think that it's due for a breather. But this pattern, the dreaded H pattern, I'll show you this. I'll do it again. So what we've got is, there we go. Let me just do the Dow. I'll do this. I'll do the futures when I do my show at 10 o'clock. I'll be able to show you at 9:30, I'll be able to show you the price as it pertains to the cash indexes. So this is the pattern we're looking at, arching over. And if it takes out the left side low, that's this low right here, then the futures are 42,496. Now, that'll become a really important moment. Why? Because if it takes it out, then the 200-period moving average of 42,096 will become very important. Let's go to the E-mini. I'm going to use the continuous contract, the ES. It's a little different. It did have a much bigger bounce, but it's still the H pattern that's taken out Friday's low. It's trading down 72.50 at 59.54. So that means that there's a chance, and this is going to be very important. I drew this in the other day. It's some kind of a support level. And we're about to test the Chapman wave inside track propellant, repellent line. Let's deal with it later on or tomorrow, but it's not important right now. The weekly charts and the monthly charts are actually doing pretty nicely. If you go to the NQ, here we go, NQ. These are the futures. NQ down 300 now at 21,400. There's this arch formation, same thing. And this one did make a peak E. The others had questionable, well, the Dow had a questionable notation. So that's a peak A, becomes a peak A minus if it takes out the 21,006.50 low that was made back in December the 20th. And just a couple of days ago, about a week ago, and that is a peak D in the weekly chart and a leg E in the monthly. So could this become much, much more serious? I'm going to go one step at a time, and I'm just saying that so far the technicals, in not the Dow, but in the not the IWM, but in the S&P and the NDX 100 are still holding pretty darn well. Let's go to the RTY, which is the futures in the Russell 2000 continuous contract. 200-period moving average just below. It's trading right now down 19 at 2244, 2244. If it takes out this low right here in the next, between now and maybe next Tuesday, 2211, that'll be serious. Going to notate that. And that'll probably take the 9-period moving average in the weekly chart under the 14 to go pink. What am I missing? SMHs. SMHs are really important. SMH held very nicely today. They're down almost 244.45, but still within the sideways move. And that's the reason why I'm saying, and I've said for a little while, that I see a digestive phase unfolding. We've been talking about that for a good part of December, going into January. And I don't see this as crash potential yet. Yeah, it could change, but I just don't see that at this particular time. I see too many rotational aspects. And I do want to go once again to Bitcoin just to say that Bitcoin, in a sense, was a benchmark because the Dow, not the Dow, but the general market was moving in sync, in concert with the Bitcoin. And both of them, mid-December, started to, well, all of them in mid-December started to top out. And now I'm watching this and saying Bitcoin is in for a digestive phase. The weekly chart is still good. To get the 9-period moving average, which is just spectacular in the weekly chart, to go negative, you'd have to see 80,000. And Bitcoin, maybe 76,000. And that'll start to get that green line very close to the black line. That's the 9, close to the 14. Okay, leg D in the monthly chart. Always got to respect those Ds. Okay, let me go to this. I wanted to get the dollar. Dollar down is down, right? Yeah, dollar's down 8 ticks. Not bad at 107.93. Did make that peak D that we're talking about for about a week now. In the daily chart, only a leg B, a peak B in the weekly chart, and a leg C in the monthly chart. Let's go to gold. Gold right now. Gold is down 7 at 26.24. Also really consolidating, but it does have the arch pattern. So we've got to watch the 25.80 level very closely. If that gets taken out in the next week or two, it's at 26.24, still quite nicely above it. Silver, there we go. Silver arching over in that pattern, the dreaded H pattern. But holding okay. I mean, it's not breaking down. Down 21 cents at 29.75. I want to go to the EUR USD. This is the euro dollar currency pair. Yeah, arching over, not doing all that great. And USD JPY, Mr. JPY, quickly before we go to the break, is trading up near the most recent recovery high at 157.45. It's just down 41 cents. I'll be back. Basil.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. I just want to show you the E-mini. This is the ESH. Made this peak D. This is just before. There we go. Right there. That was at 610. On the 29th, and peak 10, peak D, and then it arched over, pulled back quite sharply, and then had a peak A, B, C1, C2, C3. I just want to show you that because the number of times that you see C1, C2, that means it's just missing a D. And then very often, because there's a high-level consolidation, there's a little pop to a D, and that was the one that said, okay, now you got to be careful. And this was at about, just after the market opened last night, about 6:30, there was this pop to 6,016, and that started to arch over. We've had this big tumble down to a low of 59.45, trading right now at 59.56. Struggling to have a little bit of a bounce. But look at this, is very interesting. Look, the volatility index had a high. That was the Fed scare, 38.32. That was on, I didn't put the date. I should have put the date. I think it was about the 17th, 18th. Maybe I may as well put the date. The 18th of December. And then we came tumbling down in the VIX index, all the way to the 14s. However, right now, it's trading at 1820. So it's getting back there, and that's very important to monitor. And it's saying that that 200-period moving average at about 1630, we went under it, and then we popped over it on overnight, and now we're above it. So if the selling, there should be a bounce attempt at any point. Maybe just after the open, there'll be a little bit of a bounce attempt. If that cannot really find traction, then we're going to monitor the VIX index. Now it becomes very important because once it goes above 16, and then hits the 18s, now you're going to start thinking 20s. So if at any point today the volatility index starts to go into the 2021 area with the Dow down over 400 points, S&P, which right now is down 70 points, holding over 70 points, that's going to say the selling could last right into the end of the year, which is tomorrow at 4 o'clock. So I'm watching this very closely. Is it end of the year selling? Hey, it's a very interesting phenomenon. I'll talk about it maybe when I get to my show. There's just too much to do right now. I wanted to show you, look, I've been talking about this for a little while now, about the round numbers. Look, Amazon makes an all-time high of 233.00 on the 16th of December. It's trading right now at 220.36, down 3.39. That's not such a big deal, except there's this dreaded H pattern at an A, and it could become an A minus if we nick 218.73 to the downside. Now you have to consider, whoops, the season is over. Of course, all the reporting is not, but the actual season of buying is over for Amazon. Maybe it's going to be, this could be the high for a little bit. It is a peak D in the weekly chart if there's no new high, which there won't be between now and tomorrow, above 233.01. Famous last words. You never say that in the market, never, but I'm saying never. Okay, within that context, let's have a look at, so that's Amazon. Let's just look at the XRT. The XRT. So now, Tommy in his show always does fabulous work talking about the fundamentals, talking about how it relates to some of the tacticals. I'm going to do something a little different right now. I'm going to say that the XRT, which is the Spider S&P Retail Fund, which doesn't have Amazon as a major component, it is just part of it. S&P Spider Retail Fund XRT, trading at 80.82, unchanged because it hasn't opened yet, has made a leg D, maybe a peak D this month. It's a peak C1, C2 in the weekly chart. And this is going to be a tell, because if it starts to go from this level here and begins to trade in the under 79, in the 70s, it's going to say that it's filling gaps, very important gaps. But the RTH, which does have Amazon as a big part of it, Amazon's about 20%, maybe it's changed. This is from some time ago. Leg E in the monthly chart, peak G/C in the weekly chart. But look, the 9 is still over the 14, but that daily chart at a peak F, I'm watching this very closely to see what happens next, because this part of the season is really kind of done. And now we can expect some kind of a consolidation, and it is going to impact the market some. GDX, I was asked about, could I look at that? Yeah, GDX keeps making lower lows and lower highs. Not so great. It looks to me like at 34.25, no, 33.91 right now, down 35 cents. If the 33s is taken out, that 200-period moving average in the weekly chart, which hasn't been touched since it broke above it back in March, the week of the 29th of March of this year, when it was trading at in the 30 area, and then it screams up to the 44s. That's going to be the 200-period moving average, which is rising, and it's at 32.20 right now. And the monthly chart has made a peak D. Weekly chart has made a peak D. So these Ds are very important to monitor, in the sense that you've had quite big pullbacks from that fourth highest peak. Now let me go to a couple of other things that we want to look at. Crude oil. Crude oil is actually rallying. It is now for the first time, above the 200-period moving average. So I wanted to see if this was going to happen. Why? Because crude oil has been in a sideways trading range. The daily chart has started to improve. Peak A there, B, C. It's just gone to a leg D. The MACD is good. The 9 period is positive over the 14. The stochastics at 77%. The on-balance volume is okay. But the weekly chart, the 9 period moving average, if this actually can get to the 72.80 level, into the Chapman wave inside track repellent zone, that 9 period moving average is probably going to go green. And the MACDs are really green. The stochastics very weak at 42. The reason why I'm mentioning this is there's been a rotation through different sectors throughout this market, at least for quite some time, but certainly over the last 6 to 8 months. That's the reason why I've been saying, even in the semiconductors, you've got the SMHs trading right now down almost 4, but you've got within that AVGO, that's Broadcom, going to all-time highs, and almost all-time highs, except for a couple of round numbers that we've got to monitor down. 6.93 today, 234. It hit 251.88 on the 16th of December. And over the last 2 sessions, we've had a 240 open and a 245 open, and here it is, 234. And yet, NVIDIA, which was the absolute darling, has not been able to get even close to the 152.89 all-time high back in November. And that's what I'm talking about. So the rotation, the sector rotation says, and within the sectors, you've got rotation. So I'm saying I'm watching this closely. Why? Because if you can get stocks like, I wonder if I've even updated this, Schlumberger, trading down 2 cents at 37.78. This is in the oil service. This is, maybe this is not going to be one of those. Maybe let's look at USO is the fund. USO is the United States Oil Fund. There might be trades here. And that would say, we've got a big pullback. I haven't got your bonds yet. I'm coming to them in a moment. And maybe we've got some sector rotation, and we could see some rally in the oil sector. That's what I'm saying. How does this work? How does this unfold? And what I'm saying is that we've got to look at the different sectors to see which are catching some traction and which are not. Traction the other way. Let's go to... I just said we haven't looked at, what did I just say? Oh, bonds, wow. Bonds right now, and this has been my worry for some time, that the yields are going higher. Well, today, fortunately, the yields are coming down a fraction. The T-bond, this is the 30-year T-bond continuous contract, there's 113 and 30 seconds, up 21 30 seconds. A green candle, we've seen this before. This needs to get to 114.5, the pink 9-period moving average. Then it needs to get to 115, and I'll say a half again, so they can go over the 14-period exponential moving average. It just hasn't even been able to touch those moving averages for a while. And the TBT, which is the yields, this is the ultra-short Lehman 20-year Treasury bond ETF, basically looking at the yield. Made a peak C, it's stalling a little bit here. It's down 52 cents to 36.33. That's 3.633%. And it's a leg B in the weekly chart. So I think I've done a kind of a wrap up here. Now, the big question is Apple. Apple has just been absolutely fantastic. Look at this. 255.65 was the high. Oh, I don't know if I updated that. Let me just check. 260.10 was the high on Friday. I was looking for round numbers. Any round numbers? Hello? No. On Thursday. On Thursday, it hit 260.19. Let me just change that. There are 260.19. And lo and behold, it's actually pulled back. One bar Friday. Leg D in the weekly chart, leg D in the monthly charts. I'm watching Apple very closely. It is down 361 at 251.99. The 200-period moving average is 253.89, and 251.37 is the 14-period exponential moving average.
Absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Kickstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so the market's open and Basil Chapman sitting for Tommy O'Brien. This is the morning market kickoff, and let's go to the actual charts with the cash position. There's that pattern that I was talking about, the dreaded H. I'll just draw it in for you right now there. Come down sharply and then try to rally failure to peak A or a B. See, this can't be an A right here because the low, you can't have the high. The bar that makes the low cannot also be a high unless it's at a peak D. So that means you have to wait for a trough and then you can start the wave count. So that's a peak A, and we'll see if it becomes a peak A minus if it takes out the low that was made just a week or so ago, and that was on the 20th of December at 42,840 in the cash, 42,840. So 42,840. All right. It does look like it's going to. We've been talking about this for a little while, saying there's a possibility of an dreaded H pattern, maybe a best case H to M in the Dow. The S&P is slightly different. Look at the S&P, a much deeper arch formation. We're going to be watching this very closely because that was a Chapman wave red Roman candle on Friday. We not only went through half of the wick, we've gone plunged underneath, we've gapped down lower. This is starting to impact the daily to go to a sell signal, which could even be upgraded to a sell mode by the end of the day. And that suggests that the designation doesn't say, oh, sell mode means going down to and name your level. No, it just says the designation right now is it's achieved the status of a sell signal that could be upgraded to a sell mode. The weekly chart is still looking very strong. Look at the QQQ, Index 100. Also that H pattern, the dreaded H pattern, gaps down. It's down 8.5 at 514.20. And look at the weekly chart is only a leg D going to a peak D last week, and this week's a follow through to the downside, but that 9 is still way over the 14. So looking out, that's so far still a positive. Let's go to the Russell 2000, the IWM, down 219.81, down 2.5. There's that same dreaded H pattern. Looks to me like it wants to test the 215 area over the next week or two if it takes out the low that was made on the 20th of 218.07. So this is a work in progress. And here the weekly 9-period moving average is much closer to crossing negative, but it still hasn't crossed negative. And that's a peak E with a doji candle. The all-time high is 244.98. 244.46 was the all-time high back in November 2021. Made a beautiful cup formation and went to a leg D, and there's the time sequence, and it did it beautifully. And this month looks absolutely certain that by tomorrow, it will not get to 244.99 to make a new high. This is a peak D in the monthly chart. So there's a peak D. That gave a very sharp pullback to 161 from 244. This one, so far, is a work in progress. The 9-period moving average in the weekly could turn negative, but the monthly is still very, very positive. All right, I need to go to a couple of questions came in. Oh, NG. Oh, I didn't even look at NG. NG is natural gas. What a big move. That is up 67 cents at 4.05, up almost 20%. Peak A, oh, that's a peak. Peak A, B, C. Then under it goes an A, B, C, overlapping wave to a D, and now it's in an E. Very powerful move. Powerful move enough to say, wow, all those May, June highs of, this is a continuous contract that was May, the week of the 24th of 4.161, and then June the 14th of 4.159. It's being approached. And only a leg B in that's what I was talking about, the rotation through the different sectors. So now we've got natural gas working its way up for the very first time with a beautiful monthly candle. It hasn't seen a candle like this for years. I'm saying years. This is look at that gap on a Monday. Yes, this is the first time that there's the inside track propellant zone, and it worked its way higher above it. Monthly chart is still horrible. Weekly chart is really improving a lot. Monthly chart looks fabulous. So that's UNG trading at 18.87, up 3.11. And that's really the theme here. AMTX, could I look at? AMTX. Oh, this doesn't look like a great this is Amatus Inc. Is that in the biotech area? At 283, up 2 cents. Yeah, this is the first time it's done this in quite a while, about a month and a half, that it's started to work its way slowly up into the 14-period exponential moving average and tag it for three sessions now. 2 sessions has tagged it. It didn't on Thursday. It's tried to. I'm just going to say that this is methane farm recaptured to alternative company. Oh, the other natural gas. Okay. Ametus, probably A-E-M-E-T, probably Greek. Ametus at 2.83, up 2 cents. Yeah, so the only way I can see you playing this peak A, B, C, fails at a C, comes down. Yes, the only way I think that you can do this is to start with small positions. Some part of it you got to take off. Try to keep a core position, and let's just say you get in here at 285. I'm not sure what your stop is going to be because this is really volatile, but maybe 260, let's say 250. But if it manages to get to the 3.10 area, that's a good sign. I'll be back in a moment. Basil, Chapman.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, just to go in sequence of the questions that I was asked about. So this is the March wheat contract, trading at 553.5, up 7. So I'm looking at this, and this particular cup formation has the potential to test the left side high, which was on the 11th of December, and that was at 563.5. We're trading at 553. But that's not the issue. The issue is the big green candles from Thursday, Friday, and today are symptomatic of buying pressure that holds up into the close, which hadn't happened very seldom in any of this move that's been since October, where it hit the 200-period moving average and then got repelled up in the 630 area, and then it came all the way down to the 520. What is the low here? 529.25. That was on the December the 20th. So I like it very much. Let's just look at the 120-minute chart. Let's go to the, so that becomes, I'll do it very quickly here. What is the time? Oh, I have got time. Okay. Yeah. So this is peak A. No, I think, no, I missed it. A, B, C1. Oops, C1. Call this C2 right here. Okay, C2, because it didn't make a new high. And this is a D, and that's an E. I like it very much. It's taking out the left side high. The next high, yes, will be this high right here. The high of at 10 o'clock on the 16th of December, it went to 559. Oops, 559.25. So if I had a left side, right side price time match, I'd say within by Thursday or Friday, the way it's acting right now, if it can hold most of the gains into the close, then I'm looking at that left side high as being the target. What do I want to see if I was bullish? I want to see a close on a weekly basis. Let me go to the weekly, because we've not even been able to talk about weekly basis until that big pop-up that occurred in October, and then it failed, made the dreaded H pattern at a peak B minus. I would like to see a week where it closes in the 576 or higher area. That would be the first sign to say this could be a move that's a little different to the previous one in October, because at that point from 11%, I would need to see the stochastic at about 28 to 32%, and that'll be a work in progress. So this is a really good bounce off the low that was made 6-7 sessions ago, but I need to see follow through. What is the negative? The negative will be if it closes under 548 between today and tomorrow, that'll say, back to a stalling formation. Right now, this is really nice. So I hope that helps you. The question came in from, Grey Rock. So I like what I'm seeing, but the day is so young. It has traded overnight, but in the meantime, you have to look at it as the full day that you want to see this hold 552.5 right now. I'm going to make it a little different. 550 is the first key to say if it closes under 550, be careful. 548 is the next level of support. But the way it's building upside force at this particular point with the 9-period moving average making this beautiful hairpin bend, says that there's a good chance that it's going to try to tackle the 558 to 562 level over the next day or two. Hope that helps you. Next question came in. Where did it go to? I did that. Natural gas, I did that. That was Jim and Lone Tree. Okay, got that. Next question. Next question I wrote down, and that is, there it is, TGI. It was TGI? Let me just check this. Can I look at? Whoa. I saw it. It was there just a moment ago. Did I make that up? I'm sure it was TGI. Okay, I can't find it now, but I think that's what I typed in. What did I write? Oh, GTI. Okay, I'm saying to myself something wrong. GTI, question about GTI. I think it was for Duncan Steve. Yeah. Oh, this looks like wheat. Look at that nice move up. 3 candles. Actually, over 4 candles has gone from the... what is that? It's gone from 0.21, a low of 0.18, 1.85 on the 20th. It's trading right now at 1.51. That is a huge percentage move. Remember, Tommy always says, don't be deceived when you get percentages from low prices. Yes. So I am looking at this and thinking, okay, what is it called? It's called Graphite Technologies. All right, give me 1 second. Yeah, Graphite Technologies. Here we go. Graphite Tech does. Founded in 2019 in Malaysia as an innovative graphene and graphite producer, Graphite Technology has the world's first patented technology to recycle palm kernel shells generated in the production of palm seed oil to produce single-layer graphene and artificial graphite. Isn't that interesting? All right. Well, I can't say anything other than this is almost like wheat, but the 9-period moving average isn't as close as it should be right now to cross over the 14-period moving average. So I would do this. It's very speculative. You can see, I mean, that monthly chart, I can't even explain it. It looks more like a Buffett, the French artist from the 1900s. Jean Buffett? Okay, so we're looking at 1.53. Okay, all I can say is the 1.02 is the 200-period moving average. If by Thursday or Friday it's closing under 1, let's just say bounce and failure. If for any chance it closes today at 1.54 right now, if it closes above 1.50 and is able to get into this ugly candle right here, which is this candle of the December the 11th, with a high of 1.75 and a low of 1.18, December the 11th, yes. If it can get into that candle, that's going to be a really big thing, and it'll already help the 9-period moving average because the MACD has already crossed positive. Stochastic's lousy at 18%. On balance, volume is very good. Weekly chart, I can't even discuss it. It's got so much work to do. But just as, I don't know if you're treating it as a spec or if it was just a question for me, but I'm going to put it down as something I'm going to follow because it's in an area that says, I don't know anybody talking about graphite right now, but if this graphite actually starts to move higher, it means that there's demand And what you want to see sometime like the 3rd or 4th week of January, that it's actually trading in the, it's 1.73, but it actually has touched the 3s, and it has just once gone above 4. The high that I'm really looking at is the high of the week of the 20th of September, that had a high of 4.15. Can you believe 4.15? It goes down to 18 cents. Wow, that's pain. But that's what I'd be looking at if it's really going to work. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So talking about that pattern that I call the dreaded H, I developed this years ago. It's just a fascinating little pattern that you look at. Look, 102.67 was the high in the select spider. This is the comm services. This is the area where you've got the communications. You got XLC it has telephone, AT&T, it has Verizon, it has T-Mobile, but it also has Meta, Google, and Netflix. So that's really interesting because it made an all-time high back in mid-December. Then it pulled back sharply, and then it made one dreaded H pattern, and now it's making another one with taking out the left side low. And I've been looking at this and saying, well, this is a very, very interesting pattern because Google has made an all-time high just recently, and now it's making that H pattern, but so far it hasn't broken down. We spoke about, let's go to Netflix right now. Look, also that dreaded H pattern with a little double top. So I need to watch it, but the technicals on the weekly chart, even the daily, are still really good. So I'm talking about this as a rotational correction. We've had some indices like the Dow and the Russell drop much further than the others. The others are playing catch up today. The day is young. Let's see what happens this first week of January. If there's some kind of, we've got that selling out the way, and now let's see if we can stabilize, or if it's going to continue until the 20th of January, Inauguration Day. So with that said, we're about to wrap up. I'm going to do my show, the Tiger Technicians Hour, in a moment. Check out my opening call daily newsletter. I've been warning about this consolidation. We've been taking profits. We built up cash positions. We do have potential for a short if certain things work out right here, but a lot has to happen. Meantime, back at the ranch, I'll see you in a few moments for the Tiger Technicians Hour on this second to last day of 2024. See you in a moment.